everyone, and welcome to your Daily Five. I am your host, Mish Schneider, aka Mish. I'd like to thank the StockCharts team for having me on today. We have a lot to cover. What I'd like to do basically is talk from macro to micro, and basically the concept of what if we lived under a rock, which, considering how disconnected the market is from what we look at as reality, the pandemic, the incredible unprecedented stimulus, the oil crashing, the fact that we have GDP forecast going way down, 26 million underemployed, or not employed at this point. What I really wanted to prove to you was that because of the years that I have spent on the floor, 13 years, where we didn't have social media and we didn't have fancy fandangled charts with lots of technical indicators, what we had was price. Was what we've done, Keith Schneider and Jeff Bish and I, through the years, has taken what we learned on the floor in terms of looking at the simplest and most rounded way at price and show you how we were able to code that into charts and what that tells us about the market right now. So let's start by looking at two of the indices right here. On your left, you have Nasdaq, and I think it's probably one of the more interesting charts right now because of the fact that it is really the one that has led the charge. It's in a bullish phase. So in terms of pure price, what we have here are moving averages to look at, obviously historical data, which is exactly how we looked at it on the floor, except that those days we didn't even have things like moving averages really to look at in terms of on a computer, because we had Quotron, which was an incredibly basic bar chart. But what we can see here is it's a weak bullish phase because the 50-day moving average is pointing down. And we look at the price action, which is up to date right here. We can see that right now we're hitting some resistance at the high that we had last week, up about that 216 level. What's really interesting to me, though, is one of the other ways that we were able to measure price was as a momentum, which is a derivative of price, to see if the momentum is actually in line or disappropriate to price. And back on the floor, the only way we could do that from momentum was to see how many number of guys came into the pit, how emoting they was, and what the order flow was. So what we were able to do was make that into an actual indicator. And you can see, by the way, that all of these are on StockCharts now, which is awesome. Not quite available yet to the public, but we're getting there. What's most interesting to me is how we hit the resistance here at this moving average line, just as we made this high up here. And now we're doing it again, just as we match the high. And now down here, what we have is the triple play, what we call, or price leadership, where you must have some kind of benchmark to find out if you're outperforming or underperforming on the floor. We would use all different types of benchmark. For our purposes today, we're going to look at the 20-year TLTs, or the long bonds. So in essence, what we're seeing here similarly is that even though it is outperforming the TLTs right now, it's not as high as it was when last time we made this high. And certainly you can see from when we broke down, we're still nowhere near that line. So Nasdaq is in a situation where it is going to be a great opportunity to blow out this momentum and this outperformance of the bonds, or it's going to be a great short. And of course, we have a tremendous amount of earnings this week in the FANG stocks. If we move over here quickly, the diamonds look completely different. We're just starting to pierce the 50-day moving average. It's a weak recuperation phase. We are starting down here to see on the momentum basis, we're clearing that moving average, but we're still not as high as the momentum we were just a few days ago when we made this peak price right here. And if we take a look here at the triple play, again, starting to outperform the TLTs, but again, nowhere near as strong as it was. So let's move on now to the SPY. And the spider chart also cleared the 50-day moving average, again with a negative slope, recuperation phase. And again, we're seeing the momentum not quite as high as it was last time we made a high up here. By the way, that 287, 288 big resistance. And the same kind of thing that we're seeing here with the triple play, or its relationship to the TLTs. Doing better, but not out of the woods yet. Now, if we move on here to IWM, This finally is playing some catch up today, but look how far it is from its 50-day moving average. But what's interesting here is, remember I was telling you about the derivative of price and you want to look at something disappropriate. This actually is showing better momentum than what we're seeing in price. And yet in the terms of this related to the TLTs, again, outperforming, but not quite where it was. So this will have to stay up at these levels in order for us to see that this is actually telling us that we have more to go to the upside. And it'll be an interesting sector rotation if that happens. Now over here is the most interesting, of course, because this is retail. This is XRT. And XRT has cleared the 50-day moving average, cleared the momentum indicators to make a new high, where this is also making a new high, and the others I showed you, the Nasdaq and the Diamond weren't. This is. So that's a good thing, and the same thing with its outperformance, in this case relative to the SPY. So we want to keep an eye, and what's interesting is the inside of the market, or the true measure of the economy, is starting to show some signs of hope after Nasdaq led the charge. And of course we'll see if Nasdaq continues or it starts to drag everything down. Now let's move on to gold, because with the gold chart right here, which has been in a strong bullish phase, when we made this high here, we made a peak in momentum here. And at that point, relative to the GDX, it was still outperforming, but was starting to underperform the miners, which is interesting because the general rule of thumb is that miners, when they do well, lead up gold and then silver. So now what we really want to see is if we have all these tops here at this level of momentum, as we're seeing the momentum decline again today, what's going to happen to the price? Are we ready for a correction? Which it looks like we are, but then of course it's going to be how big. And now we're seeing GDX come off a little bit, but will gold start to take some leadership back up over this first Bollinger Band here, showing that it's starting to outperform the GDX again. And now let's move on to silver. With the silver chart, this is definitely underperforming, but what I like to look at here is price action, pure price, still in a bearish phase. The decline in the slope on the 50 is still negative. And again, look at momentum. When we made the peak here, we didn't quite clear this moving average, and then we came off, and now this is actually not showing any divergence. It's actually momentum is in line with the price, which is interesting. And in terms of its performance to gold, it's still underperforming, grossly underperforming, has been for a long time. So if this week we start to see this take some leadership over these moving averages and start outperforming gold, we see any kind of increased momentum and maybe more of a tackle towards the 50, it could be time for the gold to shine. And finally, I wanted to show you one specific stock, as I said, to micro. And with this particular stock, this is blue. And the reason why I'm showing this to you is because we're in this stock. And I wanted to show you something that we had skin in the game. Now, when I made this particular picture here, it was trading at 57.59. Right now, April 27th, it came back up over 59. What I liked about this chart, what got us into it initially, was when the momentum started to clear here, this Bollinger Band, at the same time that price was starting to take out some of this basing action here, and we had a good risk. Now, the question is this still a buy? It doesn't report until May 7th, but look what's happening here. This also is starting to come in with greater momentum, starting to outperform the SPY a little bit, still has resistance up here. So in terms of a specific actionable trade, what I would look at right now is with this line, the 50 at 58.15, I would try to see if whether or not this holds 58.15, and then if it does and can clear today and hold over this 60, can we get a move up to 75 or even 85 before it reports, with probably a bigger stop at 52 and maybe a more conservative stop under 57. Okay, that's it for now. Thank you so much for watching. I look forward to speaking with you again.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.